This SOXX trade is a good example of why a technically reasonable long setup can still turn into a losing trade. SOXX had recovered strongly from its recent low, price had reclaimed the 20 EMA, and momentum was improving. But there was one major obstacle directly ahead: resistance. I took the long, expecting the recovery to continue, but the breakout never developed. Here is what I saw, why I took the trade, what changed, and what I learned from the loss. Before taking this trade, I first looked at the larger structure. On the weekly chart, SOXX had previously established a major higher high before going through a substantial pullback. Despite that decline, the longer-term 20 EMA was still rising and price had bounced from the pullback area. So I wasn't looking at a market that had completely destroyed its longer-term bullish structure. Then I moved to the daily chart. This is where the long setup became interesting. SOXX had made a significant low and then started recovering. The recovery was strong enough to bring price back toward and above the 20 EMA. The 20 EMA had been declining during the sell-off, but it was now flattening as price recovered. That told me short-term conditions were changing. The sellers who had controlled the decline were no longer producing the same downside momentum. Buyers were beginning to regain control. Why I took the long. This is where I took the long trade. What I was watching here was the recovery structure. Price had moved substantially off the recent low, reclaimed the 20 EMA area, and was attempting to continue higher. The long idea was based on that improving momentum and the possibility that the recovery could continue. But there was an important issue I had to respect. Resistance was sitting directly above price. So this wasn't a situation where price had unlimited space to run. For this trade to work properly, I needed buyers to continue pushing and eventually challenge or break through that resistance. What I wanted to see. After entering, I wanted to see continued strength. Ideally, price would hold above the 20 EMA, continue making progress toward resistance, and then show enough momentum to break through. That would have confirmed that the recovery was developing into something stronger. Instead, the trade began to lose momentum. What happened next? Now we can see what happened after I entered. Instead of getting strong upside continuation, SOXX struggled to make meaningful progress. This is important. A trade doesn't have to immediately move in my favor, but when I'm buying relatively close to resistance, I want to see buyers continue to demonstrate strength. That wasn't happening strongly enough here. The resistance above remained intact. The problem with available space. This is probably the most important part of this trade. The setup had improving characteristics, but the available space above the entry was limited by resistance. That changes the quality of a long trade. If I'm entering underneath resistance, I need either enough space for the trade to develop before reaching that level or strong enough momentum to believe resistance can break. Here, the breakout did not develop. The resistance continued to matter. Time and space. This trade also illustrates the time and space concept. When I entered, I was expecting price to use the available space and continue upward. But as additional time passed, price wasn't producing the corresponding upward movement. In other words, time was passing without price, creating enough positive space. That is information. The longer price spends underneath resistance without breaking it, the more carefully I need to evaluate whether the original opportunity still exists. The warning sign. The warning sign wasn't simply one red candle. The bigger warning was the lack of continuation. SOXX had recovered strongly from the low. It had reclaimed the 20 EMA. It had reached the resistance area. But buyers weren't producing the next stage of the move. That distinction matters. A recovery into resistance is not the same thing as a breakout through resistance. Final exit. This is where I exited the trade. The trade had not developed the way I expected. The upside continuation failed, resistance remained intact, and the opportunity I originally saw had weakened. This became a losing trade. I don't need to disclose the entry price, exit price, position size, or financial loss to understand what happened. The educational value is in recognizing that the long setup had a logical basis, but the market did not provide the continuation necessary for it to succeed. Trade outcome. Losing trade. The expected upside continuation did not develop, and the trade ultimately resulted in a loss. Trade quality. Reasonable long thesis, but the location required caution because resistance was close. The recovery from the low and reclaim of the 20 EMA supported the bullish idea. However, the nearby resistance reduced the available space and meant that continued bullish momentum was especially important. When that continuation failed to appear, the quality of the setup deteriorated. What I did well, I recognized the recovery from the recent low. I paid attention to price relative to the 20 EMA rather than simply buying during the earlier decline. I also had clearly identified resistance on the chart before taking the trade. And when the expected continuation did not develop, I ultimately exited rather than assuming the market had to move higher. What I could have done better. The main improvement would have been to give greater weight to the limited space between the entry area and resistance. Instead of anticipating continuation underneath resistance, I could have required stronger confirmation that buyers were capable of breaking that level. The trade reinforces an important distinction. A strong recovery into resistance is not automatically a breakout setup. Key lesson: when going long underneath resistance, available space and breakout confirmation matter as much as the bullish setup itself. Disclaimer: this video is for educational purposes only and is not financial advice.